Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday, August 9th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, as always, here with Joel O'Connor and Dennis Dick. Got a good show for you today. We're going to talk about implications of what's going on here, but what may or may not be going on with North Korea, implications to the market. We're going to, of course, talk about that big Disney report from yesterday, implications for Netflix and really for every major content provider. We have a lot of earnings to discuss besides that. Hertz, Priceline, TripAdvisor, Zillow, all reporting, and our guest will be at 8:35 today. That is Tim Melvin. He is the author of Banking on Profit on MarketFi. Today's show is brought to you by Chaikin Analytics, winner of the 2017 Benzinga FinTech Award for Best Trading Idea Platform, Tool, or App. The centerpiece of the Chaikin Analytics platform is the Chaikin Power Gauge, a stock rating that gives you a directional edge using a proven algorithm that uniquely combines fundamental data with technical analysis and distills that into a simple rating to make so you can make smarter investment decisions. To learn more, go to chaikinanalytics.com or click on the link I'm posting in the chat right now. That's Chaikin, CHAIKIN analytics.com. Joel, how are we doing in the markets this morning?
Not good at all, Spencer. This is the biggest down opening we've had. I don't know, maybe this year. We're down 12 3/4 handles at 24.60 even, just above the pre-market low of 59 even. So extreme selling pressure on as we speak. Lowest number I have here is 24.57. That is your 9-day low. Let's go to the daily chart here just to show how long of a trading range, consolidation. It looked like we were breaking out yesterday, but now we may be breaking down 24.57. As expected, when there's a prospect of war, flight to quality in the gold market. Gold trading up $13.70 at 1276.30. So gold bugs are happy today. And silver trying to get to $17, up 32 cents at 16.71, up nearly 2%, while gold is up only 1%. Dennis, boy, we got a lot to talk about, and I guess we have to talk about comments from POTUS yesterday.
Yeah, I mean, that's what, turned the market on a dime yesterday, and that obviously is what is hurting the market here this morning. I mean, okay, so this North Korea stuff has been going on for a long time, and people are, and multiple people, maybe saying, well, we're not going to nuclear war. This isn't a big deal. The only concern for me, and, and I'm an outsider, I'm Canadian, but I'm kind of directly involved because, if the U.S. goes to war, Canada goes to war with North Korea as well. It's this comment. So Spencer, tell us exactly what, Trump said, with the fire and fury comment.
Well, that's basically it right there. Do
you have the quote in front of you?
The quote is, "They will be met with fire and fury like the world has never seen." I just want to put that in context, though, that saying the world has never seen or you've never seen is one of his most commonly used phrases. So I wouldn't put a whole lot of emphasis into that. It's one of his favorite things to say. But he did say it, and it does sort of back us into a corner should anything happen. But I don't personally put a whole lot of emphasis on that, but he did say it.
Okay, so here's my comments to that. Yeah, I agree. This is just Trump talking. This is how Trump talks. So, it's not that he, is like saying, okay, that's it. We're going to, he just talks tough. He does talk tough. But that being said, like, okay, this whole world has never seen, do the North Koreans know that he talks like that normally, and that he's, this tough love, or do they view this as, a threat, a serious threat from the U.S., and are they going to take action against it? It sounds like, this is escalating very quickly, and now, they're talking about Guam being a potential target. Obviously, that's a U.S. military base over there. If they were, and this is all just hypothetical here now, but, if they were to attack Guam, I don't know. I think we're going to war, no?
Well, I'm
It's
just
crazy.
gonna,
Like that would come.
I just want to make a couple just general comments. First comment is like, did anybody know he was going to say this? I mean, is there anybody in the White House? Is this a prepared speech, or is this just something that he just, in front of a bunch of people, in front of a camera, this is a good thing to say? Because that's the thing that probably scares me most about what's going on is like, who's in charge? I mean, I think anybody would, if that was a prepared statement, now I'm even more worried than I was before. If this is just coming off as a off the cuff statement, okay, but still, it backs us into a hole. All they have to do is a little bit of something in Guam or whatever, or looks like something. And then if we don't retaliate or do something, then we look like, it looks like we chickened out. So I just don't think you play chicken, in a nuclear war scenario. So
yeah, you're playing chicken with the wrong people too. Because, this guy is, a young, like, how old did you say he was, Spencer?
He's 33.
Yeah, you're playing chicken with a kid who's on a huge power trip, obviously, and I don't know what's going on in his head. Like, he's calling the shots over there. He could go and attack one. It could happen. Well, I mean, and then I don't think you have a choice. I think that they probably go to war, and now all of a sudden it's this is scary. It's all a scary thought. And, it just shows you how this market has continuously shrugged this off until now. Until these comments here. And now, we get the turn yesterday in the markets off these comments. We get the follow through here today. It's showing that there's a few people taking some profits off the table. Now, this is, very early, like from a market standpoint. I mean, we're like 1% off the highs only here. So, if I was a money manager and there was this much uncertainty there, I'd be hitting the profit-taking button, wouldn't you?
I think you've seen that anyways, Dennis. We've talked about the amazing consolidation in the market, multiple closes in the same area. It looks as we were going to break out yesterday. But that consolidation, I mean, we aren't going higher because there's sellers there at these levels, not letting things go. And the buyers got the best of it yesterday when we made that new all-time high. But, I can't talk about, the political implications about this. I could just talk about the technical implications from the market. And that was a key reversal yesterday. You go up and make a new all-time. I don't care if you don't care anything about technical analysis. Listen up. That was a key reversal. You made a new all-time high, came down, made a new low for the session, and you closed on the lows on the session.
Yeah.
Whatever rebound you got yesterday is dissipated overnight. So for all the
it was an ugly candle.
Yeah, it's ugly. I mean, what can you say?
And deserved. I mean, I'm shocked. We're not down more.
But look
at, am I coming in here? So here's the question. We're talking actionable trading ideas here. So am I coming in here shorting this market? I don't know, because, this could just blow over, this could, all of a sudden, if North Korea was to say something a little bit passive, we'd be right back up at all-time highs. So you have, we're basically now on headline watch on what's the next response going to be. Is there going to be another response? What's going to happen there? And the market's very dependent on that. So it's always scary. I mean, I've been punished multiple times trying to short this market, short this tape. But from a technical standpoint, that was an ugly candle yesterday. And you start looking at the individual stocks. There's a lot of stocks that are starting to not look nearly as pretty here. I mean, okay, so NVIDIA made a new high, but then it reversed yesterday too, and now it's trading down. It's been your market leader here. Apple was breaking out yesterday, but then it turned too. Sometimes these turns happen after the breakouts because you get to catch the breakout traders, going long. That's why, I think, something like those key reversals we talk about are important, because you can get short-term traders going the wrong way. Now they're caught, and then they can escalate the selling, and then obviously other people start jumping on, and then you've got a market turnaround happening, and possibly a market pullback. We've been waiting for a pullback a long, long time. Is this the start of the pullback? I don't know. It's too early to tell, but the problem is, if something happens, we could fall significantly in a hurry here. So I'm very torn here and very on the fence.
All right. Well, we're going to be here to discuss the implications. I mean, you're right. Tomorrow, if this market stays, true to course, we'll hit a bottom this morning. We'll rally back. I don't know. I don't think we're going to get green on the session today, but important technical day for the market here at the end of a pretty good earnings season, and earnings season continues. And
yeah, it does continue. And let's start going into individual stocks here. And, we might come back to political talk later in the show, but Disney here getting annihilated on their earnings report, and not only Disney, but also Netflix because of the report. Spencer, break down the details for us.
All right, here's the numbers for you from Disney. Q3 EPS $1.58 versus $1.55. Sales of $14.238 billion versus $14.42 billion. So a beat on the EPS, a miss on the sales. The big thing, though, really that we're all focusing on, excuse me, is they announced they're going to end their distribution agreement with Netflix, starting with the 2019 calendar year theatrical slate. What does that mean? It means they're pulling everything that they own off of the Netflix platform, and they're starting their own streaming service, similar to what CBS has. We talked about this yesterday and the day before. CBS has All Access, which is essentially Netflix, but just for CBS and Showtime properties. And Disney's doing the same thing now. So they announced they're doing 2 streaming services, one for sports, one for movies and TV shows, where you don't need a cable package to get it. You just need to, you're going to be able to pay a flat, whatever it is, $10 subscriber fee or whatever it costs to get access to everything on their platform. So it's kind of funny. It's almost like people cut the cord because they don't want all these channels that they don't watch, and they only want, a couple of things on Netflix. But now we're going to have like 20 Netflixes, right? We're going to have Netflix. We're going to have CBS has their own thing. We have HBO has their own thing. Disney has their own thing now. And then there's Hulu. And so there's going to be like there's going to be like 20 Netflixes now, essentially.
Competition just got a lot more intense.
Yeah,
for Netflix
yes. And
overnight here.
Yes,
and, losing
exactly.
Disney doesn't help. And now competing with Disney doesn't help at all either. We saw what happened at Costco when they got Amazon. Now Netflix isn't getting Amazon here, although Amazon is in the space as well, which is why I've always been surprised that Netflix, just shrugs off any, type of competition from Amazon. But you're getting hit here this morning, and I think it's deserved. I mean, this is a serious threat to them, at least in a longer term. Well, maybe not short term.
This is what Michael Pachter has always said, and he's been a Netflix bear for a while. And his
I've been wrong with him.
right. So his main thesis, right, is Netflix doesn't own a lot of their content, right? They pay to distribute it, but they don't own it. It's owned by other people, like Disney, for example. So when Disney says, hey, we're going to pull all of our stuff off your platform, there's really nothing Netflix can do about that. And they're really left with, what they do own, which, a lot of it hasn't been super successful. They do own, I believe they own House of Cards. And I don't think they own Stranger Things, though. But anyway, you're right, Dennis. There's just going to be a whole lot more competition. And Josh Brown, Josh Brown said it, on Twitter yesterday. And now instead of having a cable provider with one account, now you get to have 10 accounts with 10 different passwords and 10 different subscriptions you have to manage, because everyone's going to have their own darn streaming provider. So get ready for that, folks, because it's going to be fun.
Amazing, though, how Netflix has disrupted this entire industry. I mean, when you really look at it, they've come in here, and now you've got the majors coming in and taking action against it. So, direct action against it. So Netflix is, give them props for that, because they have disrupted the industry. It's good for the consumer. I mean, I like the fact they're going to break the stuff down. Maybe we can even eventually start to get into individual subscription to individual channels, which is what I've always thought, going a la carte. Like, I want to buy ESPN.
Yeah,
while
I've wanted that too,
ESPN
Dennis.
I want $10 a month. I don't have to get the other 20 stations that come with it.
Yep, I want that too. And Netflix, to their credit, Netflix, they did say they're going to continue to do business with Disney on many fronts, including their ongoing relationship with Marvel TV. This isn't
the end of Netflix. We're not saying no. We're just saying it's getting more competition.
Oh yeah.
Is Netflix still going to be the go-to streaming service? I think so. It's just always been a valuation issue for me. That's the only reason that I've never owned the stock. Not challenging the product whatsoever. I use Netflix. I love Netflix. I love the House of Cards. I think that's one of the best shows, on television. So definitely not hitting the product. I've always just been concerned with valuation. When competition starts to come in, that scares me too. So, technically speaking, the chart doesn't look that great either here, Joel. And that's why we got you, the technical analyst here, Joel. Break it down.
Well, first of all, I kind of like the move by Disney. I really do. So, I mean, obviously the street is disagreeing with me here. Now, I'm just throwing this out there. It could be a negotiating tactic. Maybe they want new terms with Netflix, and maybe get something in the works. I'm not saying that's a possibility, but throwing it out there. Technically, I'm just going to look at Disney, and you're trading right off that pre-market low, 101.41. And I'm not going to bother really with any other levels. I'm just going to say, that's going today, tomorrow. I want to see what happens at the 103 area. I think that would be the first place. That's going to be resistance. It's former support. You had 2 monthly bottoms there. So don't see a big rally until you get above 103. And then you just got to think, you could easily see that psychological $100 level. But for now, the pre-market low of 101.41 is holding up for Netflix. And I think Texas Linda said, will it bounce back? Of course, we don't have a crystal ball here, but looking at this Netflix pre-market low 167 even, and kind of, holding in here at the 172 area. If I would have looked at this chart yesterday on the daily, and I'd say, man,
it was already looking like it was perched to break down.
Yeah. And I'd say, if this loses 175 or gets anything to that gap area, I'd want to hit the exit. So now maybe I think it could easily come down and fill the gap that it had from earnings. And that would take you well into the 160 handle, 163.55. So if you don't mind, if you're a long-term holder, you don't mind taking another 8 points worth of negative price action, I think that's where Netflix is headed.
I have another thing I want to add, actually. So I think the real opportunity here, and it's going to mimic television, but the real opportunity will not be in the content providers, with Disney and with Netflix. It's going to be with the pipes. Who has the pipes? So Apple TV, right? They have the pipes because you can get all this on Apple TV. Roku, they have the pipes. You can get all this on Roku. PlayStation, Sony, they have pipes. You can get all this stuff. You can get your Disney, your CBS, your HBO, your HBO Go, your Netflix, all on PlayStation View. They're Sling TV, again, they've got the pipes too. And I've heard, I've seen headlines that Sling TVs, maybe thinking about an IPO down the road. So it's going to be who has the pipes for that distribute this content. That's where the real opportunity will lie, in my opinion, which again is the same thing as it's been for the past 40 years with TV, right? Who has the pipes? Well, the cable companies do. Well, now they don't, but the tech companies do now. So it's the same thing, just different companies. I'm done now.
It's going to be, and great points there, Spencer. And biggest thing I can take from this is, that Netflix has disrupted this entire industry. So props to them for that. But the technicals on the chart on Netflix is a little bit concerning to me too. So just jump over. Let's change subject here again, because we only covered basically one stock or two stocks since we started and we were doing political talk. There's a lot of other stocks that reported, and the disaster of the day is actually Priceline. Priceline getting absolutely whipped in the pre-markets, down 139 points here on their earnings report. We've also got TripAdvisor that reported last night as well. It's down big too. They actually popped Trip initially on their numbers, but then Priceline came out and they just hit them both hard. Give us the numbers here for TripAdvisor and Priceline, Spencer.
Well, on the surface, Priceline doesn't seem so bad. Q2 EPS of $15.14 versus a $14.20 estimate. So they beat the estimate by nearly $1. Sales of $3.02 billion versus $2.99 billion. So again, they beat both those numbers. So on the surface, does not seem so bad for Priceline. And then
on the surface, but on the stock, this is again an example of a stock, and we said it yesterday on the show. We said they're going to have to blow it away to go higher, because this thing's been straight up. And not surprising here, if they don't blow it away, that it's going to get killed, and that's exactly what we're seeing this morning. So you got to look at those charts, guys. I'm going to say, there's only certain things we keep pounding out, we keep saying on the show again and again and again. Before you hold something into an earnings report, check out the chart, and then you know where the expectations lie. And when that stock chart is straight up, that's a tough go through an earnings. It's tough to hold through the earnings, because, a lot of times they just don't blow it away enough. And here's an example of, holding it through. It looked like, made an all-time high yesterday. And you're thinking, they're going to blow it away again. It's going to be $2,100 or $2,200. Numbers aren't good enough. And we're back at 1910. So we just gave back an entire month of gains overnight.
How much do you think you would have had to pay for the 1930 weekly put that was $120 out of the money?
How much?
Yesterday on the close, $7.
120 points out of the money. It was still going for $7. So you buy that. You got the direction right. You have everything right. You're going to make next to nothing.
Well, I guess it's where we
It's
trade
139 points is down. So maybe
20. So you got a tripler. If you got a tripler,
maybe. Let's see where it opens, because the options aren't open yet, and a lot of people aren't going to trade the stock against those options. But it's hard to make money buying options.
I hate that. That's the biggest thing. It's like the stock opens. They're like, oh, we'll wait a little bit. We'll wait a little bit. And then the stock moves 20, 30 cents. Technically speaking, 1902, that is your pre-market low, bouncing up to 1910. Boy, oh boy. Do you think the pre-market low is safe here? I don't think so. We're only $3 away from it. Psychological 1900. You got to be thinking about that.
I like the 1900 level, though.
Yeah. Let me see. The last time we were under 1900, this was back in July. We traded 1873.86. So, that's another $30 away from here. I'd keep an eye on that. 1900, of course, psychological, but that's your daily low. You had 1845, 1873, and then it was kind of off to the races. So most important pre-market low, 1900 psych, and then if I did have a good short position, it did take out 1900. I put out layers at 99, 98, 97, 96, if you're trying to cover a big position, but down 7%. And just the price action yesterday too, that really caught a lot of traders because you make a new all-time high, you take out a triple top, and boom, there you are, key reversal. We'll see what happens at 1900 in this issue.
But the straddle, writers are right on the ball there too, because what did we say the straddle was priced in, or somebody just said it was like $120?
The at the money straddle.
Yeah, do you have it in front of you? Oh, 90. Flack UK said it was $90.
90. Wow. Unbelievable.
$90. So you buy that straddle, it's got to move 90 points to break even. I mean, you did it. But these guys are pretty good. I wouldn't be surprised. They're usually pretty good pricing the stuff out. I like that 1900 level because that's where you had the major resistance point back in May and June. That's where we broke out from. And I always say, where old support or old resistance can become new support. We're in a free fall here right now, so you can cut through anything when you're in a free fall. But if I was looking at any level, if I was short that thing, I'd be bringing it in at 1900. I don't know if I'm going long there, but I'd be bringing in a short 1900.
All right.
Hard to not take a they're 44-point gainer.
yeah. I don't think you're going to see too many of those.
Okay. TripAdvisor, its brother-in-law also reported, and on the numbers, this popped, but then they turned around and hit this too. I think Priceline was just down too much for even TripAdvisor. It's poor TripAdvisor. Give us the numbers, Spencer, because I think they were okay. The numbers from Trip.
They were okay. 38 cents versus 30 cents, 424 million versus 421.5 million. So they're okay numbers.
Numbers were fine. Stock popped. It was fine. It reported first. As soon as Priceline reported, they started hitting TripAdvisor. And as soon as Priceline started going down 100 points, they're like, no. And they started taking TripAdvisor red. So TripAdvisor is the victim of Priceline's numbers, even though their own numbers were good. So just because it's so related in these stocks. And TripAdvisor now trading down 7% here in the pre-market. So decent report, but punished because of Priceline.
Yeah, look at this overall chart, though, in TripAdvisor. I mean, you talk about stocks going in different directions. This one hit 111.24. Been a severe laggard. Looking at the pre-market low as it stands is 35.70, and that's going to be my number of the day because you've had 5 daily lows between 534 and 571. That's also that was the low of the recent move. Also, it's a 3-year low. I really like that area. Of course, much better place to cover is short if you have going in. But if you absolutely have to, try along in this thing, I don't mind that 35.70 area.
Jumping over to some other earnings here. And there's a few we can go to, but I was going to go to Jazz next. This is a pharmaceutical company, obviously biotech, and it's getting hit here this morning. And I want to talk about the biotechs too overall, just after we get done Jazz. But give us the numbers first, Spencer. Break down the Jazz report, and then I want to talk a little bit about the biotechs.
$2.56 versus $2.75. So they missed that EPS by about 20 cents there. Sales of 300.
Make some money though.
Yeah, sales of $394.3 versus $410.8 million. So they missed the sales by pretty decent chunk as well.
I like this company, and I like this long term. This is something that I am interested in purchasing. I think you got some growth at a decent valuation. It's down 8% here today, $140. The big level it's coming into as well. That being said, the biotech charts, on their own don't look nearly as good. So, Joel, quick breakdown the Jazz, and then I want to talk IBB, and I want to talk some of the other biotechs as well.
Not too much, 37.70. That is your pre-market low. I'd like to see it get a little bit lower on the session to fill that March 17 to 20 gap. That would be 136.49. So I don't know if we're going to get there today because you are a couple bucks off the pre-market low. But I'd be looking at that area, 136.49 for a gap fill. And then, Dennis, I'll pull up the IBB chart. I remember you had that breakout over 300. Or is that where we're coming back down to?
It feels like it's heavy here now. You're getting a breakdown day here today. It feels almost head and shouldery. And it's not the prettiest head and shoulder in the world, but I'm looking, from the June-July action. When we traded 310 to 320, I would give that head in the breakout up near that 329.90 high, almost like a little double head that formed. And then we've been kind of hanging out, trying to form a bit of a right shoulder here between 310 and 320. We take out that 308, 309. You ran straight up from 290 very quickly, and that can run down very quickly as well. And when you look at the individual components, obviously some of the biggest stocks in the IBB are the stocks like Biogen, other stocks like Celgene. They're all hanging out kind of near the highs. They still look okay. They're still holding their trends, but they aren't making new highs here now. Like the Celgene almost looks head and shouldery as well. So, which is a little bit concerning. Gilead, which is a big component. I own shares of all of these stocks in my investment portfolio. So long term, I'm still sticking with that theme. But short term here, these stocks have had a hell of a run, and they look like they might be ready for a pause.
Taking a look, I'll just do the IBB here. I think you just got to give it some room. I mean, 300 was your major resistance level. Ahead of that, though, let's see what happens at 310, because after you had the breakout, you had the breakout. And then I got over 320. I missed the buy over 300. I was really hoping it was going to come back down to there to test an old resistance, but it didn't. Look at the multiple lows here in the IBB. Let's call it 309 to 310. If I can pull it up on my dailies. Yeah, actually, the whole area surrounds it from 308.49 to 310.41.
It's the next level.
Yep, that's the next level. We'll see.
It's if we take that out, that's where you start to really go, ooh. Because then you don't have much below that. Like, what's below 308? Really? You ran up in 3 days from 295 when everybody got caught there.
Yeah, you got to take profits when things are going up, because when
it's just you start looking at charts like the IBB, and you start looking at other stock charts turning yesterday, and you wonder if there isn't something more to this market. I mean, S&Ps are still we're talking the S&Ps only being at 1% off the all-time high.
Yeah, we're down 0.5%.
There's a lot of reasons to take profits here. If you're not taking, I don't know if there's reasons to short, but if you're sitting on a lot of positions here, there is some reasons to take profits. Like I said, something could change tomorrow over there. Some headline could come that, sounds like, a softer stance from North Korea, and this market will be right back up at all-time highs. But if it goes the other way, that's the risk here. So there is risk involved. And, that's why we saw the VIX popping yesterday too. VIX up over 12. You go from 10 to 12 here in one day. That's, just direct concerns here right now with what's happening overseas.
All right, real quickly, Jar is asking what's up with FireEye, and it just didn't move off its earnings report, and it's moved low. No enthusiasm in the stock. We've talked about this just hanging up at 14. Now it just closed just above it. It looks like it's just kind of begging here for, I mean, you can't get away from the 14 level. Looks like a possible gap fill there. Dennis, I just want to ask you real quickly. You were trying that swing short in CMG. I hope you held on.
No. Oh. You want to know why? And it was dumb. Dumb reasons, but I did cover yesterday, and I wish I wouldn't have. I might put it back on and reinitiate it here. I've had trouble holding this one. I've been bearish with stock forever. And I keep having trouble, I keep finding reasons to cover it. And, bad reasons yesterday is we had a lot of defensive stocks, a lot of stocks that have been not defensive, but a lot of stocks that have been beat up, catching a bid yesterday morning. And I was like, I don't know. This one was down a little bit. I got concerned and I'm out, but this is one I still think we're going to be sub $300. So this is something I'm looking to reinitiate here too. It's not down much there this morning. I'd love it to have a pop so I could get, on a little bit better price. But I think when the dust settles here, I think with a war or without a war, I think CMG is going under $300. That's my target, under 300 on this thing.
All right. Well, I saw it took out the low of the move yesterday, but that was later in the day. No, that was
it still looks great from a short perspective. I should not have covered that, but that's the day trader in me. Coming out, and I struggle with that. I've always struggled with my swing trades because of my day trading. I've always been good in my investment portfolio because I don't look at those stocks. Maybe I should have just stuck it short in my investment portfolio. Then I wouldn't have been looking at it.
All right.
Anyways, it's always trouble to wear multiple hats.
4 minutes until we bring on Tim Malvin of the Deep Value Investment Ladder to talk about.
Let's take a quick look at imbalances here, just because it is a day, that's out of the ordinary here when we're down 10 points on the S&P. It's sell imbalances across the board, which is not surprising whatsoever. Bank of America leading the charge, 192,000 to sell. The banks are weak here relatively this morning as well. Even Alibaba has a sell imbalance. The last day Alibaba had a sell imbalance, 24,000 shares to sell in Alibaba. Just the only thing really, they're all pretty much sell imbalance. They're all pretty small. But I'm looking for any type of, buy imbalance here. Square has a 32,000 share buy imbalance, but it's trading down 37 cents. So I don't think that's going to hold. I mean, U.S. Steel, 47,000 to sell. These just came out. These are the first institutions. The only thing, obviously, with buy imbalance is the gold stocks, because gold's trading up substantially here this morning, which we haven't mentioned yet. But I mean, when you have uncertainty like this, gold is going to catch a bit. I know people were saying, Bitcoin's the new gold. Well, it doesn't work that way. When you have a potential nuclear war they do jump into gold, and gold is catching a heavy, heavy bid here this morning. We're up over $1.30 on the GLD.
Yeah, 12.89. These last print in the futures. If you are playing these gold stocks off the open, actually looking at the gold chart, you do have a nice technical formation. You are at some resistance here, folks. We are above 12.80. But just be aware, you had a 12.80.30 high. That was a former high of the move. We were above that. Not much between 1280 and 1290. Of course, psychological 1300, but gold getting a nice lift. If it falls under 1280, though, the action on the upside may be curtailed.
Couple symbols coming from the chat. Dr. J wants to know about Fossil. They did report there. Spencer will have those numbers for you last night. FOSL. Down 21%.
Yup, Q2 adjusted EPS of a 61-cent loss versus a 46-cent loss estimate. Sales of 597 million versus 617.9 was the estimate there. So just a miss on both those numbers.
A mess, whatever you want to call it. This story is over.
Yeah, sales are
this
down. CFO is resigning. The whole thing is just a mess.
The whole thing's a mess. This story is over. Its stock was $139 back in 2012 when everybody had to own watches, I guess. Well, and then you got up to, 2013, you retested that level. We have been straight down since 2013. We're now under $10. People saying it's too cheap. Maybe it is, maybe it isn't. But this whole, story is just a mess here. I'm not sticking my money in this because this looks like a dying story to me. Can it get bounces? Can it come back? Sure. I mean, it's, I might come in here shorting it now at $9. Now, very late to the party when it was 133 years ago. But I'm not coming in here buying it here either, because this is a stock that falls under my 90% rule. When a stock falls 90% from its highs, 90% of the time they don't come back. And that's why I'm thinking this is not on the way back.
All right. Two things here. One, that top in the issue was around when Bubba Watson won the Masters and he was wearing that pink Fossil watch. I have to bring that up. Second, the founder of the company is a Michigan grad, and he'll be an honorary captain in one of the Michigan football games if he has any money left for a flight. Pre-market low 854. I believe that's an all-time low in the issue. Buyers stepping up now to the $9 levels. You could see here, basis the 15-minute chart. So bringing in a short here, I'd see if you could get some stock at 9, and I think it's going to be bid under 9 down to that pre-market low 850. If you're looking for a rally on this, your highest level since hitting that 854 is just above the 950 area. So 850 to 950. That's your trading range here. I'm not shorting it in 950, but if it gets above there, could have some room to get some of those steep losses back, down 22%. Last print 923.
I don't even know if 10 is in the cards here now at 923, and it's starting to get heavy down here too. So 898 is the low of the move. Like that was back in June. So ignoring the pre-market low. So I still think you got some support there at $9. Maybe if you had somebody short it, they'd probably try to bring it in here. But long term, all that report and all that fundamental information you just gave me, Spencer, makes me scared to come and take a position in this.
All right, well, 8:35 now. Time to take our break, and we're going to go grab Tim Melvin. He is the author of Banking on Profit. Is his site. It's maybe the best small bank analyst that we know, at least. So we'll be right back with Tim Melvin.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel behind the glass, and we have Tim Melvin on the line. He's a MarketFi maven and the author of the Tim Melvin Deep Value Letter. Tim, I would have to say you weren't the first guest on the show, but I think you were pretty early on in the days of Benzinga's Pre-Market Prep. How you doing?
I'm doing great. Just sitting down here in Florida, loving life.
Okay, so we always talk about the universe of stocks that you follow, and I know you like to follow, the smaller bank stocks, and you have very strict criteria that you use to choose your stocks. How's it looking now? Is it looking? Is there just like the buy filter is just lighting up, and you don't know what to buy, or is the choosings pretty slim?
It's pretty slim out there. I mean, if you look outside the small bank universe, it's just a handful of stuff. My two problem children, Volt Information, Visi, VISI, and Unisys have both gotten smacked around. So, long-term buyers can look to add those to the portfolio. And of course, you've got my two never sell REITs. That's Brookfield Property Partners, not a REIT, but a income-producing real estate partnership. And Colony North Star. I mean, you can still add those to the portfolio and just never sell them. But outside
symbols
of
on
that,
those, Tim? Symbols? I'm waiting in the background. What's the symbols on those ones?
BPY, and I think I'd wait for a little bit of a pullback on that one. And then Colony North Star, CLNS. Those are both, they're two REITs with this incredible global property portfolio. I keep saying REITs, even though Brookfield's not a REIT. Sorry, guys. And outstanding world-class management that I think you can just buy and own forever.
And what's the yield on those?
Let's see. Let's pull it right up here.
I've got your back.
You got it. Yeah,
thanks. 4.94 on BPY, and CLNS is a whopping 7.47.
Yeah. So I think you can just buy those and hold them literally forever, as long as there's no management change or they don't do something stupid with the balance sheet.
And you're not worried that, those dividends, they've been paying them for a long time. They're rock solid. You're not worried.
They're more than covered by earnings, and both in their management calls have said that, we feel like we can continue to raise that year after year. And I think they're absolutely correct.
All right, let's, before we go into some individual stocks here, let's just talk about the temperament of the Fed. Janet Yellen, whether or not she's going to get another appointment, we don't know. looks like rates were going up. The numbers were indicating, stronger U.S. economy. She makes some dovish comments in July. I mean, it just going back and forth here. Long-term rates are historically low, Tim, and I don't see that, changing anytime soon. But just give us your outlook for the Fed and how it affects big banks and small banks.
Well, I mean, obviously the Fed wants to raise interest rates. Whether or not they can justify it's another story. The economy is better, but not good. That's what I've been saying for the last 4 or 5 years. I should get some sort of award for my highly accurate economic commentary here. But, they almost need to, because let's say something happened today with North Korea. They don't have any tools left to put money back in the system. So they need rates higher. So you'll see, I don't know if they're going to be able to justify December, but you'll see one fairly early next year.
So do you got some small bank stocks there on your radar that are going to benefit from this? Like some new ones for us, Tim?
Some new ones? I got to tell you guys, I haven't done much outside of the really tiny stuff that is actually too small to talk about.
You're coming and buying 25% of the company.
Pretty small banks, but the last ones we added were, they were right around $10 million market cap. And I don't think we want to blast all those out to all your listeners here and have the SEC visiting my.
Maybe you do.
Just get your sell order out there. Downward Dog. Do you follow community banks? Any community banks on your radar? And also, Tim, you're great about telling ones that are off your radar. ACAD just came in. I don't make sure that's a bank stock or not, but tell us about community banks.
Well, I mean, the small banks here, especially the ones that we've bought, because we're, pretty unreasonable about the type of banks that we'll buy. ACAD is a biotech company.
Yeah, I got that. Sorry about that.
Most of the community banks reported last week, with a couple earlier this week, but we're pretty much done. And for the most part, the reports were solid. There was decent loan demand. They're taking market share from the bigger banks. Profits were up. They're buying back stock. They're paying an increase in dividends. They're really kind of in a sweet spot.
Tim, symbol coming from the chat. Wells Fargo, somebody wants to know about WFC. I mean, some of the big banks have been on a run, but just recently, some of them have cooled, and Wells Fargo has been cooling here for about a month. We were $56 back beginning of July. Now we're trading the 52 handle here. It's a time to nibble on some Wells Fargo, WFC.
I don't think Wells Fargo is anywhere near being done with the headline risk.
Okay.
And, they had some bad problems in their branches. How far up the management ladder they were aware of it, we don't know yet. But, there's going to be pressure on the board. There's going to be more changes there. The regulators are really going to, be all over them going forward. So it's going to be tough for them to grow the bank for now. And where is the stock? It's about 1.47 times book. I mean, if Wells got close to book value, I think you'd have to buy it, but there's no rush to buy it here.
You like them at book value?
I like below book value. But
okay, well, if we're going to talk below book value, what about these European banks? Because a lot of European banks are trading below book value, or is there just too much risk over there for you?
Selectively, I think that you could make a case for buying them, but with the European markets up quite a bit this year, I'd wait.
All right. Also here we got BKU. Take a look at that one. I believe that's Bank United. Is that one that you follow?
Yeah, we follow that a little bit, just simply because it's in Florida and we have a buy everything in Florida policy.
Okay.
Why? Why do you have a buy everything? Just because you're in Florida?
Because it's you've got a growing population. The housing market and commercial real estate markets are doing very well down here. So far, nobody's doing anything stupid. Everybody, now this is Florida and banks, so eventually they're going to do something stupid. But right now, they're making good loans. The economy's growing. Their housing markets are great, so it's a fantastic loan environment. I mean, you look at Bank United. Forward earnings estimates for the next 5 years are 15%. You're paying 15 times earnings, so that's a good price. Price to book is 1.42. That's an attractive currency to buy some smaller banks. But then you've got everybody wants to be in Florida. All of the regional banks want to be here. So seeing them get bought at a 175, 180 multiple of book is not an unreasonable proposition.
Bank of the Ozarks here. That does not look good, especially the way the other banks have been trading. 42 major support here. Any comments on Bank of the Ozarks?
Well, Bank of the Ozarks is digesting a lot of recent acquisitions. They're one of the most acquisitive banks on the planet. And, they do a deal or two a year, and they always have. They do a great job of it. If you look at the long-term chart on that, it's been fabulous. But they've got to digest some recent acquisitions. They missed, earnings estimates, and stock got smacked around a little bit. The way that I buy Bank of the Ozarks is the same way I buy my favorite bank, which is Home Bank, HOMB, down in Conway, Arkansas. I'm not going to pay this price. So I just sit here and I try to figure out what they're going to buy next. I buy that at a discount to book value. And eventually I'll get Bank of the Ozarks shares because they'll buy one of my banks.
Okay, that's a good way to play it.
It's worked forever. So.
I just want to, before we let you go here, Tim, a market veteran, of course, at the top of the show, we were talking about the latest political going on here. You've seen a lot of different headlines, going over the years, things that move the markets, fear the markets. Could just put things in Tim Melvin's perspective on, the Trump comments and how it affects, if it doesn't affect your portfolio analysis at all.
It doesn't affect my analysis, but at the same time, the only real risk to this market, because there's no financial risk in the system pretty much at all. There's no real bad loan problems. Nobody's doing anything stupid. So the only problems that we could possibly see are going to be geopolitical. Now we've got this goofiness with North Korea. But if you look at Washington in general, this is a special form of insanity. The Democrats and the Republicans have always been opponents, but now this isn't about governing. It's about scoring points for your political team. And you've got all this stuff that needs to be done: tax reform, regulatory reform. You've got to do something with healthcare. There's still, income inequality problems, all sorts of stuff going on in the country that needs to be addressed. And they're too busy fighting each other to even start. So I agree with Jamie Dimon. The biggest headwind to the U.S. economy right now is our own politicians. This is crazy. This is the worst I've ever seen it, and I'm old.
Tim, last one, and we'll let you go. Your product, Banking on Profit. Tell us a little bit about that.
All right, well, that's our newsletter for the community bank stocks. We've, toot my own horn, we've done extraordinarily well. It's been up for 4 years. We're thumping the market with the main portfolio. We have something called bonus picks. That's those tiny ones that I talked about that we can't talk about on air or in public or anything else. They're so small that I won't put them in the main portfolio because I can't guarantee that everybody can acquire shares around the current price. But if you had been able to buy them when I recommended them over the last 4 years, that's compounding at over 30%. So it's just a fantastic product. I think small banks for the individual investor just make more sense than anything else you can do in the market. And I said, we're just absolutely crushing the market. We've never had, knock on wood, a losing stock pick. We don't have an open position that's down, and we've never closed a trade as a loser. So it is a relatively easy space to make money once you know the rules. I had an old guy teach me the rules a long time ago, and it's been a pretty profitable endeavor. So I think if you're struggling to make money in the market, you should definitely sign up for this newsletter, because this will consistently make money and it keeps you out of trouble in bad markets as well.
All right, Tim Melvin, Banking on Profit is the name of that newsletter. Thanks so much, Tim. We'll get you back again soon.
All right. Thanks a lot, guys. And have a great day up there in Michigan. And thanks to the Tigers for the series loss to the Orioles earlier this week.
That's a sore subject, I think.
All right.
Yeah, we don't talk Tigers on the show. Not this year.
All right. S&P's catching a bid here, Dennis. We are now 64.75. The buy the dippers are coming in here early. Let's see here. I'm not seeing a whole lot mid-range on the day in the S&P's. We'll keep an eye on that. That's 2464.75. That's where we're trading right now. So 10 minutes left here, Dennis. Did we get to all the earnings stocks?
No, there's some other ones here. Modern Labs getting rocked. It's
Oh.
coming back, though. It's on a little bit of the comeback trail from where it was. I mean, this thing was already rocked ahead of the report. It's popping back right now just as we're covering it here. I don't know if they said something on the conference call or not, but it was down a lot more earlier, and it's actually only down $1.50 here now. Give us the numbers here quickly, MYL, Spencer.
They're reporting there this morning Q2 adjusted EPS of $1.10 versus $1.16, sales of $2.96 versus $3.04 billion. So a miss on the EPS, a miss on the sales. Guidance for the fiscal year coming in lower than the estimate, both for EPS and for sales.
2.4 million shares already traded there too. So big time volume going off here on MYL. This is one, I've got in my investment portfolio. It's been a value trap for me and obviously not a good one. When it's market's making new highs, on my investment portfolio, if I look at my 80 or 90 holdings, I'm up probably in 80 of them. There's probably about a dozen that I'm down in. This is one of them. And this one is not pretty.
Man, if you were shorting this thing just on the Teva news, just going, tick for tick, bam, bam, bam. I mean, you would have started this at the $38 level. Then you get this kind of report and you take it under $30, $28.51 is your pre-market low. And that just a 15-minute chart just makes you think, man, oh man, buyers are coming into this thing. You're not going to see the pre-market low. Close, will you see the close at 31.79? Maybe not. But there you see the buyers coming in. This thing hasn't traded under $30. Well, it traded $30 back in July of 2013. So for me, I'm looking at this one. I think the low is in. Where a rally is going to take you, I don't know. What was the close? The close was way up at 31.
What was the pre-market low on this?
28.51.
Yeah, I don't think it's going there. 28.51.
And Teva, man, this thing is just
bouncing back right now.
It is.
Not that.
There we go.
18.5 matters at all to the people who bought this thing at 31 prior to the disaster of a report that it had, but it's bounced back 2% this morning.
Yeah, so bringing in some shorts here. It doesn't look, even the 5-minute doesn't look like much. Let's go to the daily here because I'm sure day traders are hopping into this stock. Big increase in volume, nice ranges. On the dailies, you got another stick to go to get to yesterday's high, 1942. So there's a potential target on the upside. Your 2-day high, 20.14.
Zillow, we haven't talked about yet. You can pick your symbol ZG or Z or Z as we say in Canada. Both stocks, these trade together here. So I don't know which one. I think I'm trying to figure out which one's got the better volume. I think it's the Z, the single Z that has the better volume. Anyways, down 7% on earnings. Give us the earnings for Zillow Group.
12-cent loss versus a penny loss estimate. Sales of 266.85 versus 262.5 million. So a good sales number, but a pretty bad EPS number. They see Q3 sales coming in line with the estimate, and adjusted EBITDA is $64 to $69 million.
Ran up into the report, giving it all back from the last 2 days and actually getting right into an area of congestion here that we had before. If you're just looking at the single Z, 44.50. If you look at all those lows, 44.35, 44.36, 44.20. A lot of congestion in this area. It starts to take that out. And I'll go right to the low, which was 43.39 back on July 13th. That's a level that absolutely has to hold. If it started going down below 43.13, then I start thinking this thing could go to $40. But it looks like it's bouncing back a little bit from the after hours lows there. There is some congestion in there. So I think those might hold those lows. Yeah,
there you go. Multiple lows and a lower 44 handle that coincides with the pre-market low of 44.24. Even if you do, let's say you do break 44, that's $1.25 away. You got another double bottom, or not quite a double bottom, but you got a pair of lows straddling 43.50. But this all that price action, all that price discovery you had in the lower 44 handle, then goes up to 51.23. I think you find some buyers. in that area. Dennis, have you been watching this RDFN trade at all? Redfin?
No.
New IPO. I guess it's the what do they call it, Spencer? Like the like a technology driven real estate company.
I thought it was just online. Online real estate.
And I don't know why people got so excited on this thing, but 1929 to 33.49. I figured this one out. 14-point move. That's right. 14-point move. Half of that 7. So 26.26. It's given back 50%, but it's trying here, but needs to get back over $26 to go back up. But I do IPO there. Redfin did good out of the gate, finding some profit takers now.
Frankie in the chat wants to know about defense stocks. So buying like an RTN, obviously because of the concerns over here in North Korea. I mean, they're all up today. So RTN making new highs here this morning. Lockheed Martin making new highs this morning. General Dynamics is trading flat here. NOC is trading slightly up. Even Boeing's holding on. Actually, Boeing just went into the green too. So they're all trading up. And obviously, you get a war. You'd think directly, RTN, your Lockheed Martins are going to benefit from that. Only problem is they've been running up. They've already been running up. And what happens is all of a sudden we don't have a war. I wonder if these things don't, all of a sudden top out because of this. Sometimes you just need some type of catalyst to top out. I mean, Lockheed Martin had an upgrade yesterday. It broke through 300. It's been running straight up too. These have been big moves already. So it's not like these things were sleepy and all of a sudden they're going to start catching a bid. They've already been running up. So some of this already kind of probably a little bit priced in. I don't know.
Stick with them,
it's hard
right?
to just jump in these for a war trade because they've already had the run.
Right.
They can go up more though. So I'm not coming here shorting them either.
Quick question here about biotelemetry. They had a earnings beat here of 2 cents.
What is that? What is that?
Someone's asking about BEAT, B-E-A-T, and I just wanted to give the report a 2-cent beat, slight miss on revenues and sales. I don't know, 36 was a big level in this thing. I'm just looking at the daily charts here. So 36, even though it did take it out, Dennis, you're good at this. Even though 36 was a level, went to 36.50. I think 36 is going to reemerge as your resistance. Coming on the downside, your 2-day low 34 even, but don't know a heck of a lot about the company.
Taking us back to the war talk here. Jag Trader wants to know about crude. Do you come in here and you start buying oil if we're going to end up going to war? I mean, we don't know. This is the question. Usually oil will rally too, especially if we're going to start a war with them. We don't know where this is going. It's escalated, but it could end quickly too. I mean, we've had issues where North Korea's always, had lots going on over there. It's just the first time we kind of had a direct threat back to them. So I don't know where it's going. The market's jittery here, but the market's not, in collapse from this at all either. We're talking less than 1% off the all-time highs here. So, if you think we're going to war, I think oil probably catches a bid too. I think if you're going to full war, you're probably still good with the defense stocks as well. My concern is that if we don't go to war, and you're coming in here today buying Lockheed Martin at the highs, and you're coming in here today buying oil after already a pretty substantial rally here lately, as of late in oil. I mean, and obviously not the last week, but I'm talking for the rally from June when we were down under 865 on the USO. We've had a pretty good run here on some of this. So it's not like it's been sleeping too, and all of a sudden this is going to wake it up. This oil's bounced back already. So I just don't want to buy somebody else's profits.
Yeah, Nick talks about that a lot. Lumentum reported today a nickel beat. Slight miss on the sales, so I'd be a little leery on that. Stock had been beaten up, getting a nice pop, 64.75. I think you got a good level to look at here in LITE, and that's $65. You had that high about 5-6 days ago, a high just above it. So getting a lot of the losses back from that sell-off from 68.63. So I'm looking at 65 as a potential resistance level. Currently trading at 65, so we'll see what happens there. Dennis, any final comments, or should we go to Spencer?
Or a quick imbalance update, Dennis?
They've grown. The selling balances have grown. There's a few buy balances sneaking in there now too, and the S&Ps have come back. I mean, when we started the show, we're down over 10. Only down 7 handles, or 68 cents on the SPY is what I'm looking at. Bank of America 300,000 to sell. AT&T 116,000 to sell. Sometimes AT&T is defensive. Sometimes these defensive stocks, and I'm not talking the defense like Lockheed Martin. I'm talking the stocks that people typically play a little more defense with, is like the higher yield ones like the Cokes and the Pepsis, the Procter Gambles, the Johnson and Johnson sometimes fall into that. Some of those are holding up okay in the pre-market. Your utility stocks, the XLU. I mean, the TLT is trading up $1.37. So one thing is, when you see the bonds rallying like that, you automatically think, okay, banks are going to be weak because yields are going up here. So banks are going to be weak. And then the second thing you think is, utilities and stuff that obviously benefits from lower rates is going to be strong. So, you look at the utilities, the XLU is trading up in the pre-market slightly. And some of your other utility stocks are trading a little bit on the green too, but I'm not seeing a lot of money flying into there this morning. So that's just a word of caution that, if something escalates here, it could be a kind of sell everything except gold tape. But we haven't seen, there's not enough information here yet. We're still digesting, what, is going to be happening here in North Korea. And if it escalates further, then you start, considering, portfolio ramifications. But I don't know if we've escalated far enough where I'm coming here and making drastic moves.
Alrighty, 9 o'clock now. That's it for us today. Before we go, I do want to mention once again that our show today is brought to you by Chicken Analytics, winner of the 2017 Benzinga FinTech Award for Best Trading Idea Platform, Tool, or App. Centerpiece of the Chicken Analytics is their Chicken Power Gauge, a stock rating that combines proven fundamental data with technical factors to give you a simple rating to make smarter investment choices. To learn more, go to chickenanalytics.com or click on the link I am posting in the chat right now. Mark Chaikin will also be on our show tomorrow. He's one of our guests along with JC Perrette, so we got a good slate for you on Thursday's show. We're going to be, I have a hunch, talking about retail earnings. There's a couple of big ones that are reporting tomorrow. So that'll be it for us today. Hope everyone enjoyed our show. Good luck out there, and we'll be back with you folks on Thursday.